Hello traders, welcome to the Trade Desk Global Video Charting Review for the equity and ETF market for June the 1st, 2011. We ask that you pause the video, read the disclaimer before reviewing the video. Trade Desk newswires on equities were heavily impacted on Wednesday with the release of far weaker US ADP employment data, which was not helped by the Institute of Supply Management report that showed a contraction in economic output. Both of those had a devastating effect on equity valuations that clients had been highlighted on the Tuesday evening last day of the month trade. We saw a move from 3:30 to 4 o'clock that looked like a 100-yard sprint at the Olympics or the last 400 yards of the Kentucky Derby. It was ridiculous how the market on very low volume allowed the S&P 500 to be pushed higher at the close, which closed out the month at that high of the day. We did put a note out to clients that global markets were very disjointed. Do not buy into that long push, and overnight we saw the consequences of that. In our technical review, we are going to be looking at the near-term chart, same as on the bullion and on the currency charts. We're going to be looking at the near term, keeping it to a 1 hour time frame, so we can show you how the markets evolved overnight. The movement we saw on Thursday evening, there's the gap at the close of trade, literally right at the close of trade. S&P was trading down at support on the 1 hour chart around the 33.30 area. As the markets gapped in that last half an hour of trade, it wasn't able to follow through and create a sustainable signal. From our perspective, we then were watching overnight momentum reads that weren't able to follow through in the fashion that you would have expected for the gap higher in S&P trade. Really wasn't able to follow through. Note went out to clients not to buy into the moves higher, but instead to wait until we got a confirmation on the Wall Street Open. Signal came to us to short the S&P from around 1340, which we sent out to clients with initial targets 1338, 1335, and then 1319, which all completed. We did send emails out to clients saying that the markets were disjointed, not to trust that final gap, and to expect the first month of the of June, or the first day of the month of June, to be very volatile, especially with ADP, ISM numbers coming out of the US and the non-farm payrolls. Right at this point in time, now is not to get short the S&P. This will retrace a little bit, probably will work its way up to 1330 by the close of business. We'll then have the Asian and European reaction that did not catch the bulk of this move lower. So Asia's got a lot of catching up to do in regard to equity movement when that market opens, and we will update as that unfolds. But right now, if you didn't catch the signals from us, if you didn't catch the alerts, hold steady, sit on your hands. Patience is key as we wait for a reversal, and it does look very, very likely we'll be selling the S&P 500 from the next test of upside resistance.